this is what the last thing I want to talk about is basically the bond market long end is a function
Ooh,
of expected inflation. Yeah. That I mean that looks like hymns in 2024 when David was
that
just
looks like
dunking
an
on
equity
people.
chart. That's a bond chart. Eek.
That's a forward rate, so it's the forward rate between the 5-year spot JGB and the 10-year. So that's the expected rate from 5 years over the next 5 years. And I don't
Got
want
it.
to like get into a lecture about forward rates, but like yes, exactly. Like that is a pure expectation, right? Like because no one knows the hell is going to happen tomorrow in a year. So 5 years from now, definitely not. I mean, maybe we'll just only have agents and like none of us will have jobs and we'll all just be like hanging out on the beach. I mean, but the point is this is going to make the BOJ have to act at some point here, or they're a huge energy importer. The Strait of Hormuz situation is impacting the UK, impacting Japan, impacting Korea, impacting the EU, and at some point it's going to impact China. China's well prepared, they're very smart, they're a serious player. Still not yet there, but like look, I said this before, like it's pretty clear the US, this is our policy. Like they're like, oh, Iran. Like, no, no. We want the straight close because we're putting the screws to everyone else. All right. Like that's what's actually going on. And like, Trump won't say that, but like that's what's really happening. But the problem is these guys are our allies. And if their bond market is going to go like this and their inflation, I don't know if you guys saw the inflation print, but like they're going to have to do a Jay Powell 2022 move. And if they do that, I mean, people who don't live in the levered finance world won't understand this, but like for a long, long time, you borrow in short end of the curve in yen and you buy anything else, basically. That is literally one of the linchpins of the global financial system. We saw it unwind a little bit in July of 24. Steve, you remember that? I think on
Yeah.
this show, that was our first year of Wall Street Beats. We did a crisis, whatever, because that was when we had Herb Greenberg
Markets are
here, and
melting.
Herb just had too much CNBC in him that he wanted to do markets in meltdown mode. And that, by the way, that was the bottom. The day we did the markets in meltdown mode was the
Of course.
bottom, and then we ripped after that.
Of course.
But
Of
like,
course.
basically, this is the one catalyst I would give for everyone as a viewer. Keep an eye on this because if that keeps going, the BOJ is going to have to do something that will set FFX fall off. That will literally unwind the equity and credit markets globally, and that's
Do you think a
driven by
Japan move
oil.
forces a U.S.? Do you think a Japan move forces a U.S. hike?
No, I don't think the U.S. is going to hike. I think they're going to bullshit people and say what they're doing. Waller was on speaking this morning. He didn't say too much, but we're at a hike of 75% by December. That's not happening. And so,
Of
last
course.
thing I'll say, and then I'll let David talk. In 2008, I had the same thing happen where it was like the DSO9 euro dollars, not SOFRs back then, was at 97.15. I was long basically the same contract in SOFRs. It was 97.10 the day the war started. Now it's 96. Okay, that went down to 95.70. The bonds ripped. Everyone thought, oh, and there was big inflation, 5% inflation in the summer of '08, if you guys remember. And China was the impetus. This time it's the AI capex boom, and then next thing you know, oil's at 147, and then oh my God, oil's at $33 and rates are back to zero. So like that's my analog, and that's what I think is going to happen. But in the short term, you got to play the game, and if you use leverage, it's hard to like
So
play them.
let's tie this off with how you started, which was fading the cues here. Is this sounds like a very short term fade if you're just doing it if you're doing it 0 DT or for tomorrow.
I,
Uh,
I did, but you
I
know
would
what?
assume with rates, this rates move is going to
Yeah,
this
will
thing
you
could have
roll
more
it?
legs to the downside. Why not
Let,
take
let,
some more
let
duration?
me let me tell you something. Because if you listen to what I was talking about in the podcast, and I'm sure I sent you that stuff, is that we have a really tightly wound like market that the dispersion is insane. So a lot of these pod shops, like David's former employer, Balyasny, Millennium, Citadel, blah blah blah, all these guys. One of the big trades on the street is to do this dispersion trade where you go long single stock fall, short index fall, and so in implied and realized correlation are near like 15, 20-year lows. And so that's why like people who are value investors go nuts. Where yesterday, most stocks are up, but the index is down. The week before, the index is up, but it's only a small percentage of the stocks up. And so until the correlation rises, the guys who want to short the SPY are pissed off because that's not working either. But like basically what I realized is in these situations, just like that October 10th last year, you can get a real quick gap down. In the Kospi thing I said, we've had 3 down days in a row. Trump shot his wad yesterday of being like, "Oh, we're not going to attack them," and they rallied it into like an index rebalance end of the day. Well, you know what, guys? I'm in the money. I bought a lot of 0DT, and I never do this. QQQ 695 puts, 695.30. It was at 706 when I did that, or 705.50. So let's fucking go. Now I'll let David go now.
Hi, I'm David Maris. If you like what you just heard, we've tracked every single pick we make on the show, every ticker, every thesis, every entry price, over 1,100 picks and counting. We put it together in a free report with our top 10 performers, the reasoning behind each one, and a preview of our full dashboard. If you want access, the link is in the description.